LICMF Manufacturing Fund is a fund that focuses on the India's growing manufacturing sector. But is this the fund the right choice for your investment portfolio? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decisions to reach your financial goals in a more faster and smarter way. But before analyzing, let us first understand what is LICMF Manufacturing Fund is about. So as an NFO, it opens on 28th September 2024 and closes on 4th October 2024. And some of the key features of this fund is that it belongs to a category of equity thematic fund, and it is an open-ended fund type which has Nifty India Manufacturing TRI as its benchmark index, and there is an exit load of 1% which will be charged for redemption within 90 days. There is no entry load in this fund, but there is a minimum investment of 5,000 rupees you need to make to start your investment journey in this fund. And the fund managers for this fund are Mr. Mahesh Bindre and Mr. Yogesh Patel. And according to the riskometer, the risk involved in this fund is very high. Now, the primary investment objective of this fund is to provide long-term appreciation, capital appreciation to the investors by investing predominantly in equity and equity-related instruments of companies following the manufacturing theme. Now, to analyze whether investing in this fund will be suitable to your investment portfolio or not, we are going to explore the pros and cons of investing in this fund. So let's start with the positives. One of the key advantages of the LICMF Manufacturing Fund is its direct exposure to India's manufacturing sector, which is expected to grow significantly in the coming years. With the government's push for Make in India, the fund taps into industries that are vital to the country's economic development. Another advantage is the sector-specific growth potential. So manufacturing is a sector that has the potential for long-term growth, especially as India looks to become a global manufacturing hub. This fund could benefit from favorable government policies, infrastructure development, and increasing foreign investments. There is another advantage called diversification within the manufacturing theme. So while it focuses on the manufacturing sector, this fund provides diversification across various industries like automobiles, pharmaceuticals, chemicals, and textiles, reducing risk by spreading investments across different areas of the sector. Another key advantage is the potential for high returns. So if the manufacturing sector continues to grow as expected, the LICMF Manufacturing Fund could offer higher returns compared to other broader market funds. So investors looking for long-term growth potential may find this sector-focused fund appealing. These are all the advantages present in this fund. Now let's take a look at the disadvantages, which are the potential drawbacks present in this fund. So one of the major disadvantages here is that this fund has sector-specific risk, which is, as a sectoral fund, this fund is heavily concentrated in the manufacturing sector. So while this can bring growth, it can also increase sector-specific risk. If the manufacturing sector underperforms or faces challenges, the fund's returns will be impacted significantly. And another major disadvantage is the higher volatility. So manufacturing stocks can be highly volatile, especially when they're influenced by multiple factors like raw material prices, government policies, and global economic conditions. This fund might experience sharper price fluctuations compared to more diversified funds. So the next potential drawback here is that the limited exposure to other sectors. So because this fund focuses solely on manufacturing, it misses out on other key sectors like IT, financial services, or even FMCG that often provide stability during economic downturn. Investors may want to consider adding broader market funds to balance out their investment portfolio. And another major potential drawback here is that you need to understand the cyclical nature of manufacturing. So the manufacturing sector tends to be cyclical, performing well during periods of economic expansion but struggling during downturn. Investors need to be prepared for the fund's performance to fluctuate in line with the economic cycle. You need to understand and carefully consider all these potential risks you might be undertaking by choosing to invest in this fund before taking any decision. So what is the final takeaway from our analysis on the LICMF Manufacturing Fund? Is it worth investing or not? As we can see from our analysis that this fund offers a unique opportunity to tap into India's growing manufacturing sector. However, it comes with higher sector specific risk and volatility. So, if you believe in the long term potential of India's manufacturing and have a higher risk tolerance, this fund could be a strong addition to your portfolio. But as always, weigh your opinions carefully and assess your risk tolerance before making any investment decision. But our personal opinion is the decision to invest in any fund or even in this fund is completely up to the investor, because it boils down to factors like their risk tolerance, the investment objective, and so on. But our personal opinion is that if you are a first time investor or even a conservative investor who's not willing to take a lot of risk, you can definitely avoid investing in this fund, because this is not a beginner friendly fund for you to start investing, and it also, according to the riskometer, it has high risk involved. So if you want to just start your investment journey in, it's better if you start with funds that are easy to invest in, because to invest in a thematic fund like this, you need to have at least a sufficient amount of knowledge to at least predict or time the market, or at least know how the market works. But if you are a beginner, it might be a little bit tad difficult for you, so it's better if you avoid investing in this fund. But if you still want to invest in a manufacturing thematic fund, then choose other existing manufacturing thematic funds with a track record, because this is an NFO and we are yet to see how it will perform, and it will now only build a track record. But there are other existing manufacturing thematic funds with track record out there in the market of at least 7 to 10 years, where you will know that it has completed the market cycle, and you will know how it has performed in the highs and lows to take a calculated risk. But here, investing in this fund will be taking like a blind risk, because we do not even know how much risk we are taking. So it's better to stick with funds that has a track record. And also, these funds are not suitable if you're looking to add funds to your core investment portfolio to achieve your main financial goals, because as we have said, this is a thematic fund. You need some knowledge, because market is already highly unpredictable, and when it is a thematic fund, you do not know when this theme will perform well or not perform well. And additionally, if you add this fund to your investment portfolio and it underperforms, definitely the returns will impact your overall investment portfolio's returns as well. So also, this fund is not suitable if you do not know when to enter and exit from a manufacturing thematic fund. So it's better if you avoid investing in this fund if you do not have that kind of sufficient knowledge to comfortably predict the market, because even for a professional, it's hard to predict. So it's better if you avoid investing in this fund. And finally, if you are struggling deciding what decision to take based on your investments, definitely consider consulting a professional like a certified financial planner, who will look at the suitability of the investment objective, risk profile, overlap ratio, and the allocation of the fund you want to invest in, and craft an investment strategy that will suit your unique financial needs and financial goals. So definitely consider consulting a financial planner to make the investment journey simplified for you and even helpful for you in the long run. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.